So in this session, I'm going to discuss the budget, right? So in your budgeting lesson, there are different types of budget. So like the sales budget we have, and then so this is the sales budget. If you see sales budget, and then we have the sales budget, right? And then we have the production budget, direct material usage budget, direct material purchase budget, direct labor budget, factory overhead budget, selling and administration budget, cash budget, master budgets. Right? So, first of all, I'll be discussing the sales budget and production budget, labor hour budget, those things. So, this is the question that I'm going to discuss. Right? So, this is the question. MRC Limited makes products data. The following data is relevant for the year 2022. So the direct material prices are given and the opening inventory and closing inventory of those raw material also are being given. Then direct labor is given, sales information also have been given, and selling price, etc. have been given. In order to create any fluctuations in demand, the sales manager plans to have 100 units of beta product on 1st January 2022 and 200 units at the end of 2022 as inventory. Okay, so first of all, let's prepare the first type of budget, which is the sales budget. Based on this information, so how to prepare the sales budget? Sales budget. So sales budget, first of all, we must take the number of units sold. Number of units sold. Number of units sold. And then we must multiply it by the selling price per unit. Selling price per unit. So based on this question, the number of units sold is 5,000. So you can see it here. And the selling price is 182. So 5,000 into 182. 5,000 into 182. So the answer will be total sales value will be 910,000 rupees. Total sales value. So this is the sales budget. And then if we move to the second type of budget, that is the production budget. That is the production budget. So production budget, production budget. So what is the format of a production budget? So the format of a production budget is units to be sold. So that should be taken from the sales budget. Units to be sold. And then we must subtract opening stock minus opening stock finished goods. FG means finished goods. And we must add the closing stock finished goods. Take the units to be sold from the sales budget. So in this case is 5,000. Right? So 5,000 units are being sold. and minus opening stock finished goods. So if you see the question, opening stock finished goods, opening stock finished goods, in the question, it is given as in order to cater any fluctuation in demand, 100 units and 200. So opening stock is 100 and closing stock is 200 units, finished goods. So these are raw material, right? But these are finished goods. So I'll substitute the values. Opening stock is 100, so minus 100 and plus 200. So production units are 5,100. Production units. Then moving forward, so if you take the direct materials, there are two type of budgets. Direct material. We have the direct material usage budget, and then we have the direct material purchase budget. Direct material usage budget and direct material purchase budget. So if you take the first one, direct material usage budget. So how to find that? Direct material usage budget. So direct material usage budget, to calculate that, what you must do? You must take the production unit. Production unit. So from where to take this? From the production budget. Then we must take the direct material per unit requirement. Direct material per unit requirement. So that we can get the total requirement and then take the rate per unit of materials, and at the end we can take the total cost of direct material. Total cost of direct material. Now, in this question, if you see the question, um, here they have used two materials, material D and material N. So therefore, you can prepare the direct material usage budget for both the materials. Right? Now here I will put material D and here material N. So if you take material D, the production units from the production budget, which is here, are 5,100. So I can record it in both the places, 5,100. Then direct material per unit requirement, is given here. Each unit of finished products requires 12 kilograms and 6 kilograms. So that is the direct material per unit requirement. So 12 and 6. Then we can take the total requirement by multiplying these two. So 5,100 into 12, it will be 61,200. And in here, 5,100 into 6, it is 30,600. And the rate per unit of material, in the question, it is given as 2 per material D and 3 per material N, 2 and 3. So here we can multiply this by 2 and we can multiply this by 3. So the total cost of direct material is 61,200 into 2, 122,400. And here 30,600 into 3, it is 91,800. So the addition of both is 214,200. So this is the direct material usage budget. Then if we move to the next type of budget, which is direct material purchase budget. Direct material purchase budget. So in direct material purchase budget, first of all, we must take the material requirement. Material requirement. So the spellings are just there. Material requirement, from where to take direct material usage budget. Direct material usage budget. And then you must subtract opening stock raw material and add closing stock raw material. Then we can get the total purchase of direct material, total purchase of direct material and the rate per unit of direct material, rate per unit of direct material, and finally total purchase of direct material, rate per unit of direct material, and finally we can get the total cost of direct material purchasing, total cost of direct material purchasing. So like in the previous one, we have two materials, which are material D and material N. Material D and material N. So based on the information, material requirement, if you can remember, we must take it from the direct material usage budget. So in the direct material usage budget, total requirement of material D is 61,200 and of material N is 30,600. Then we must less the opening stock raw material. So in the question it is 3,000 and for material N it is 4,000 and the closing stock of material D is 4,000 and 2,000 of material N. So here let's substitute the values 3,000 and here 4,000. Then when it's come to closing stock, here 4,000 and 2,000. So the total purchase of direct material will be 62,200 units. And here it is 28,600. So the rate per unit of direct material is, in the question it is given as 2 and 3. 2 and 3. For D it is 2, for N it is 3. 2 and 3. So if you multiply, you can get 85,800 here. And here you can get 124,400, which will give a total of 210, 200. So this is the direct material purchase budget. Then if we move to the direct labor budget, So in the direct labor budget, how to calculate? First, we must take the production units from the production budget. So the spellings, they are rectified. Per unit requirement of labor. So this per unit requirement of labor is in hours. Per unit requirement of labor is in hours. So that by multiplying those two, we can get the total labor requirement in hours. And then we can take the rate per hour. And finally, we can get the total cost of labor. So here, if you see the previous production budget, the production units were 5,100 and per unit rate of labor, it is given in the question. Labor is paid 10 rupee and it requires 7 hours. So per unit requirement of labor is 7 hours and the rate per hour is 10. Per unit requirement is 7 and the rate per hour is 10. So here per unit requirement is 7 and the rate per hour, I will write it here, rate per hour, it is 10. So if you multiply 5,100 by 7, it will be 35,700. If you multiply it by the rate per hour, it will be 357,000 rupees. So these are the budgets, right? So the first one we prepare was the sales budget. Number one was the sales budget. Then we prepare the production budget. After the sales budget, we have prepared the production budget. Then we prepare the direct material usage budget. Then the direct material purchase budget and the direct labor budget. Right? So, in this direct material purchase budget and direct material usage budget, if two materials are given, you must put two materials. If three materials are given, you must put all the three materials. So even you can do it based on this given format as well. So there is no issue, right? Similar thing, similar thing. Right. So now this is the production budget, right? So in the production budget, number of units sold and planned closing stock, right? Planned opening stock and the units produced. So I have skipped this step. Total units required for sale and stock. So you can incorporate those and do. So I just skip this step. Right, so the other things also are same, right? So sometimes I might have skipped one step, right? But the same answer you can incorporate those steps and do, right? So this is the end of the sales budget, production budget, and material usage and labor budget. So next we'll see with the cash budget.